In this weekend video, I want to take a look at what's happening in some of the markets. Stocks are clearly moving down into a daily cycle low. I don't think this is going to turn out to be a larger intermediate cycle low. Several reasons. The daily cycle was right translated, which means it rallied for more than 20 days. Here we have the Dow, which clearly shows a strongly right translated cycle. And right translated cycles don't typically form intermediate tops and then start this stair-stepping down process. So it just doesn't seem likely to me that the Dow is going to drop back below this daily cycle low. We're already 30 days into this cycle. They usually don't last more than 35 to 40 days. So that tends to be why right translated cycles don't stair step down. They don't have much time left at the end of the cycle to move down. So I'm of the opinion that we're probably going to need one more daily cycle, and that the intermediate cycle low, the larger degree decline, will occur during the next daily cycle. And I think that's probably going to line up with the debt ceiling, which is going to come due in mid-October. So my thought right now is that this is just going to be a daily cycle low. We're going to get a rebound out of this. Maybe we put in the bottom on Thursday. Maybe we got one more little pop down early next week. But I don't think this is going to turn into a larger intermediate decline. I think we're going to bottom here pretty soon if we haven't already. Go back up, and I think the S&P has to at least hit 2,500 before this intermediate cycle tops. And I'm going to cover this in a lot more detail in my weekend report for subscribers. But the COT levels, the intermediate sentiment levels, just are not really at the kind of extremes that would tend to trigger an intermediate decline. All of those levels are pretty mild right now. I mentioned this in a comment in one of the last reports videos I did, but the McClellan oscillator has gotten deeply oversold, and there just isn't a lot of room here for this to keep falling lower. So I think we're pretty close to our cycle low if we didn't already get it on Thursday. Here's a little bit wider picture, and you can see we've reached levels, pretty extreme oversold levels here, only exceeded slightly by the move down into the 7-year cycle low in 2015 and early 2016. And here we have the put call ratio, which you can see has spiked, indicating extreme fear. Again, just not a lot of room left to the upside here, so I think we're pretty close to the cycle bottom in the stock market, and I think we're going to get a rebound. We got about 2 weeks to the Jackson Hole Symposium. The Fed is probably going to want the market back at or near the all-time highs for that event. So I'm going to say we're going to get a bounce here pretty soon. Probably back up to at least test those all-time highs, and I would think that the S&P would at least manage to tag that 2,500 level, and then I think the real decline is going to occur. Well, I suspect we'll probably mostly go sideways in September because we've got another FOMC meeting at the end of the month. But I suspect the real waterfall decline, if you will, is probably going to happen in October as we get closer and closer to that debt ceiling. And then I'll finish this with a look at the semiconductors. This has been the leading sector during the move out of the 7-year cycle low and into what I think is a final bubble phase. We've got what appears to be a triangle consolidation. The market has rallied very strongly ever since the bottom, a 7-year cycle low bottom in February of 2016. Didn't even have really much of a pullback into the election night like the rest of the stock market, and then really took off afterwards. Has gotten quite stretched above the 200-day moving average. And it, if we were in the vertical phase of the bubble, then I would expect this just to keep going, but I don't think we're there yet. I think we're going to have one more pretty good correction before we start the vertical phase of the bubble in the stock market. I'm expecting that to occur in October. So price it needed to pull back to the 200-day moving average, or it needed to go sideways, and it looks to me like we've probably started a triangle pattern here of sideways to allow this moving average some time to catch up. So price came down just far enough to tag this lower trend line on Friday, which makes me think that we may have gotten the daily cycle low on Thursday or Friday. And if we come back up and we do break out of this consolidation, there's a major resistance at about 1200. So that would be where I would look for a top in this intermediate cycle, is if the semis can tag about 1200. I don't think they're going to go through that 1200 resistance zone during this intermediate cycle, and I think they'll have another strong pullback, maybe all the way down to the 200-day moving average in October.